You might be wondering, is now a good time to invest in real estate?
Trust us, if Palm and I have $1 for every time someone asks us that, especially recently, we would be billionaires seriously. And guess what? We ask ourselves the same thing.
It's one thing to wonder when the real estate market was hot. Our biggest question then was, hey, it's hot, but has it peaked? But when the market's off peak, we find ourselves wondering, even if the real estate market's on sale, is it too down to invest?
I mean, look, if you had a crystal ball and could see into the future with confidence, we would love to share that knowledge with you. The best thing we can do is to remind you that the what if in life will always hold you back. If you really want to find financial freedom and disconnect income generation from your time, we want you to ask this important question next. Do people make money when the real estate market goes up?
Definitely.
Okay, great. But do people make money when the real estate market goes down?
Absolutely. Hello, I'm Palmy.
And I'm Nancy. Together we make the Kitti Sisters, your financial BFF.
Today we're going to be addressing the giant pink elephant in the room, like talking about interest rate hikes, no pun intended, what it means and how you can ride the wave to be on top of the biggest wealth separator in history.
Please like, comment, leave a review, and subscribe. So, why now? Let's get started.
If you're paralyzed with fear and always asking, is now a good time to invest in real estate? You'll always be stuck on the sideline, wondering and daydreaming. And we know our people here at the Kitti Kingdom want to be put in the game, not sitting on the sidelines.
Look guys, we will address the huge pink elephant in the room. The truth is, if we aren't already in recession, we are definitely heading into one. Agree or disagree, Palm?
The reality is that inflation is still at a 40-year high and interest rate is definitely trending in a direction which obviously will affect the affordability of real estate across the board.
But ultimately, if you're here tuning into us, then we can safely assume you love real estate. Here in the multifamily space, we know that you believe in the value of tangible assets, you desire to protect your wealth and grow alongside inflation, and you want to participate in the greatest wealth transfer in history.
If that's not you were probably looking for a Kitti with the Y show and mistakenly came to ours, because here at the Kitti Sisters with an I, we love to buy real estate at a discount, and now is the time.
Knowledge itself is power. One of our favorite actors, Keanu Reeves, said, "You can't stop the wave, you can learn to surf." Ladies and gents, now is the time to learn how to surf. Economically and metaphorically speaking, economic downturns are part of the natural economy, and for those who know how to use them, they can be a transformative life period.
To continue with our water analogy, it's like having a roaring waterfall. Either you let it flood the village, or you can create a way to capture it and turn it into electricity, using it in a dam, or diverting it for agriculture and sustenance. Either way, knowledge is power. Can we stop and be vulnerable for a sec? For the last few weeks, during a moment of brain fog, some fear and doubt crept in. We're in the business of helping our passive investors make a lot of money so you guys can sit back and enjoy the life you deserve. But with all the craziness happening, how can we make this work?
Don't worry, after a nice bubble break, we regain our lucidity. By the way, if you guys haven't never indulged in our boba drink, you should definitely try it out. We aren't saying it's actually the healthiest treat, but sometimes a little sugary snack is just what you need to clear out a little brain fog.
Think about the corporate giant Facebook or Meta or whatever they're calling themselves these days, and Uber, both of which were formed in the year 2008 during one of the biggest financial crises in history. That recession cost a lot of people their homes and livelihood, and one of the hardest years that we've endured as a nation.
But a crisis, even a national crisis, doesn't mean all is lost. In fact, in 2020, we, the Kitti Sister, grew exponentially even in the midst of COVID-19. We went from acquiring $6.225 million in 2020 to acquiring $80 million alone in 2021.
Not bad for one of the worst years in the country and really the world in general.
Like it or not, we're currently right in the middle of the biggest wealth separators in history. You see, in current economy, there will be people who will come out of this as winner and who will create generational wealth, and unfortunately, there will be others who will lose a lot of money.
So what's the difference between people who will be making a lot of money right now in real estate and those who aren't?
One word: knowledge. Quite simply, the know-how.
Here's the Kitti Sisters ninja tip. If you don't have the knowledge right now, hang out with smart people who already understand the things that maybe you're not paying attention to or don't quite understand yet. Author and speaker James Clear calls this a keystone community where every goal is more achievable when you hang out with smart people who've already achieved what you are looking to achieve.
When it comes to investing, you must
Invest with discipline.
invest only in the right properties and market.
Invest only with the right team, not with a pack of rabid hyenas chasing after apartment deals indiscriminately. While we're firm believers that wealth has a need for speed, this should never come at the cost of our passive investors.
You might be thinking, this all sounds awesome, Palm and Nan, but how do I get started investing mindfully? Well, download our ultimate passive income guide to learn how.
Why now?
There are different things happening through different economic cycle, but finding a way to pivot and make it work will make you become a better investor. Will Rogers said it, invest in inflation. It's the only thing that's going up.
And we know that real estate likes to follow wherever inflation goes.
If you believe that real estate will continue to go up in 10 to 20 years, then now is the time. Similar, if you believe that the high interest rate will affect people's ability to buy their homes so that they have no other choices but to rent, then now is the time.
If you believe that by acquiring an asset with an assumable fixed interest rate that's in the mid 3 to 4% with longer loan terms, think like 5 to 10 years at least left on their loan term in exceptional market makes sense in any economic situation, then now is the time to invest.
Think about it. We are seeing new interest rate quotes around 7.5%. If you are able to assume a loan, let's say, for example, at mid 3 or 4%, how much lower will your monthly mortgage be? It's half, right?
If you love getting massive discounts on property purchase price, then now is the time to invest.
If you really believe even in today's economy, there are submarkets that are crushing it with cash flow and appreciation, then now is time to invest.
This means you'll be more likely to continue cash flow distribution without any fear that the current interest rate will kill your cash reserves. Your property will maintain a healthy balance sheet and will be able to operate brilliantly.
Essentially, this strategy de-risks the investment because it takes out the variable that can tank any apartment investment right now, the high variable interest rate on short-term loans.
So what are the Kitti sisters' major pivots for today's market?
First of all, we widen our field of vision and stop fixating on only investing in common markets we always have invested in.
As Ralph Waldo Emerson famously stated, do not go where the path may lead. Go instead where there's no path and leave a trail. Second, focus on disciplined investment approach.
Forging new trails doesn't mean abandoning all your discipline. We still need to invest in landlord, investor, and business-friendly state that have no rent control, a strong population growth, job growth, and high medium household income. Anything that, above $80,000. This just means you open up to new possibilities.
Nan, do you remember that as a kid I hated cheese?
Yes.
So this is probably because we're immigrants and the first exposure to cheese we got was super processed McDonald's cheeseburger cheese. Yes, that was it. And that completely ruined cheese for me for years. I was like, yuck. It wasn't until freshman year of college that my world opened up and I was like, where have all these delicious cheese options been? Parmesan, Gouda, blue cheese?
Oh my God, right?
So I was like, wow, I needed these cheese. Okay, guys, back to apartment investing. Always remember that demographic and market strength criteria that you set can be transferred to other markets that maybe are just a little bit less known, right? So definitely don't miss markets simply because you aren't too familiar with it, because you simply give it a try.
That's right. Third, we make sure that we approach each investment from a conservative point of view.
Our business plan must be simple and, of course, straightforward. We're always hyper aware of our investors' return expectations and always aim to overachieve rather than disappoint.
For the Kitti sister, you know by now that we review hundreds of deals only to purchase 3 in 2021 and similarly in 2022 as well. This means we say a lot more no's before we say yes to one. So make sure whoever you invest with has the same approach.
We've already acknowledged that, guys, people make money in real estate when the market's up and when the market's down. The difference between people who will create generational wealth in this economic downturn and those who unfortunately will lose out big time is knowledge.
With knowledge comes confidence, and with confidence comes execution. Believe in your investment criteria, believe in the market selection, believe in your conservative investment approach, and believe in your execution.
So, cash multipliers, you may be wondering, how do I de-risk my investments? Investing in properties with discounted sale prices below market fixed interest rates, long-term loan is probably the best way to de-risk your investments. There will be no market fluctuation that will tank your cash flow. Those kind of components have actually been taken off the table.
Guys, isn't this what we've been begging for the market to reset so that we can buy apartments on sale, right? In the case of purchasing properties on loan assumptions, we get to have the best of both worlds.
Sounds like red velvet cake to me.
In a perfect scenario, Palm, if we could find a 2021 property that we could assume a fixed rate long-term loan at, let's say, mid 3% interest rate. So what does this mean, right?
Well, okay, let me geek out. This pretty much means like we get to take the DeLorean back to 2021, buy that property with fixed low interest rate, yet pay 2022 discounted price.
Wow.
That would be a pretty perfect scenario.
Indeed.
Cash multipliers, while you may not be able to control the economy, you have the power over your approach to growing your wealth, hedging against inflation, and handling your investment.
The difference in asking yourself the question is millions, right? Instead of asking yourself, is this a good time to invest in real estate? You should ask, how or who can help me make millions of dollars in real estate in the biggest wealth separator in history?
So that's it for now. If you want to secure a piece of the pie and the biggest wealth separator in history, join the Kitti Freedom Club now, which we provide the link in the notes.
Thank you again for tuning all the way to the end. As always, we're trying to bring you up to speed on what's happening and share the best tips and tricks in building long-term wealth in a world that's always changing.
Don't forget to click like, subscribe, and hit that bell icon.